Good afternoon, traders. Good afternoon. This is Raul Rivera with your afternoon market profile review. Today is Wednesday, July 19th, 2017. Let's get started with today's review. Very active day in the crude oil market. We had the inventory report come out, and it was a blowout win for the crude oil market, crude oil prices. And it was also, economic news today was just out of the gate fantastic. That's why we're seeing the S&P rally. How much did it rally here? Like a couple 15 points or something like that. Let me see here. Let's verify that. 14 points up to this moment. 937,000 contracts only have traded so far, so it's not the biggest volume day, but 14 points rally is pretty good considering you have the volatility index sitting at 9.79, which is horrendously horrible. There's zero volatility in the S&P 500. There's no fear in the market. Just continue to buy it, and the market's just going to continue to go higher. There is zero catalyst that can take us lower. Okay, speaking of news, we had building permits, we had housing starts, we had that was about it. So building permits and housing starts, that came in at around 8:30 in the morning, and it was just a blowout, just blowout numbers. Building permits month over month up 7.4%. Building permits for the month of June were 1.25 million. Housing starts month over month growth. In the month of June, 8.3%. We were expecting 5.8%. And, they weren't buying the S&P right away. It wasn't until the 9:30 a.m. bar that they started really picking up the pace in the S&P 500, just continuously buying. We could see right here just the sheer amount of volume from the 50 to 200 lot trader, which would be the institutions just buying this just nonstop, all the way into the close. I mean, here at the final, at the end of the day, just look at the amount of volume that just went up. From 3,855 to 11,000. They bought this right after the cash markets closed. I mean, that's sneaky, right? Because most people usually trade the SPX or the SPY, and those markets close at 4. So these guys coming in, real sneaky after 4 p.m. Buying the S&P 500 futures is very, very large. What else can I say? I mean, this market is going higher. We also had the crude oil inventory, but we'll talk more about that when we go over the crude oil market. So today we were really looking to be buyers. Here we can see just the amount of, what, I want to take a look at that bar. This one right here. Let's see if they came in. I mean, it doesn't look like too much here on the footprint going on, but there's like 14,000 contracts went off at 24.70.75. That's a lot of contracts. I mean, another 14,000 here. I think this is where they started buying pretty big, 70 and a quarter to 70.75. But there were also some sellers matching their orders, so it's not humongous. There was a buyer for those. Excuse me, there was a seller for those buyers, right? Somebody said, "I'll agree to purchase that from you," rather than the market makers having to negotiate that and lift prices from there. So pretty even, but well hidden is what I'd like to say. But when it comes to looking at 50 to 200 lot trading volume, you can't hide from that, right? The institutions cannot hide, but it's also known that let's see, where's my tool? It's always hiding from me. Let's see if I can pull it up. There it is. You can't hide from me, institutions, but you need the proper software. We have that proper software here at Techniques Trader. We have the proper software to be able to take a look at what the institutions are doing. Here we can clearly see that if they were buying on the footprint itself, it's pretty even between buyers and sellers. But when it comes down to, whom we want to follow, which are the institutions, these guys have the deep pockets. These guys have information that, regular retail customers don't. And they know what they're doing. These guys rarely lose. So to see that they're buying really, really big here at the close just lets me know that there's just further upside to be expected here in the S&P 500. I think we definitely see 2480, and we should find some resistance there at 2480. We always find a little bit of balance in the 80s, and then we tend not to spend too much time in the 90s before we break out above the next whole number, which would be 2500 in the S&P. Looking at the profile, pretty simple, D followed by a P. Not so much in time, but definitely in volume. We were going higher all day long. We never really sat down to consolidate, but we can see volume behind the letters. Definitely higher volume here than at the lows. So this is a P, and D followed by a P, consolidation followed by a trending up pattern. We know that now. We're going to be able to use, looks like for tomorrow, we definitely want to be buying 64. We can see that there's value created at that area. And we also want to be buying 60. So early this morning, we were looking to buy 53 to 54. 52 to 54, just to be fair. 52 to 54. Market never sold off. And if this level had failed, 40 to 46 is what we were looking to buy. But now, going back to the market's most recent memory, for tomorrow, I'm definitely going to be looking to buy looks like maybe 63 to 65. This is for tomorrow. I'm already predicting it today. And 60, pretty much. So 65 and 60, I'm going to try and buy those. Of course, tomorrow I'm not going to put a trade overnight. I like to go to bed at night. I don't like to hold positions overnight. But yeah, D followed by a P. The market's going higher. Okay. Not only that, but the institutions are backing this move higher. Just stop. Just get rid of the sell button because there's no use for it other than to get out of a long position. Okay. The S&P is going higher. Unfortunately, I have no trade in this one. The market never pulled back. There's no volatility at all. Looking at the crude oil market here, early in the session, we were looking to sell 80 to 90. And if that spot failed, we were looking to sell 20 to 30. And this level I highlighted in yellow because it's resistance from 2 weeks ago, exactly 2 weeks ago, which is my maximum amount of time that I like to look back in terms of historical data for support and resistance. Nobody cares about resistance from 3 months ago, 6 months ago, or 2 years ago. Okay, by that, the market, the catalysts that were driving the market, and what may have made those levels support and resistance back then doesn't necessarily make it true today, right? So market's most recent memory is what we're looking for, and it's what works. This one I highlighted in yellow because it was literally at the maximum amount of time that I like to look back. Worked out really well for the crude oil inventory number. So we put a bracket for the inventory number. For the bracket, we were looking to buy 46.10 to 20, and we were looking to sell 20 to 30, which was exactly what we did. I personally took 40 ticks off on this one, and on only just a two lot. I don't like to put all my eggs in the crude oil inventory basket, but it was a decent trade, really nice actually got a fill, and the reaction to the market was immediately to sell as soon as it got to this value area, and it traded as low as 46.80 before coming back up. Made a decent 40 ticks on that trade, and then I actually reversed long because I mean it's a blowout win for the crude oil inventory number. So crude oil inventories came in at negative 4.72 million barrels. We were forecasting negative 3.21 million barrels. So a bigger inventory draw than we were previously expecting. Okay. Number two, uh, the Cushing for crude oil inventories. Okay, inventory draw, distillate fuel production in inventory draw, and then gasoline production inventory draw. It was just an inventory draw everywhere. Gasoline inventories minus 4.44 million barrels. They were expecting a draw of 600,000 barrels. We got 4.4 million. So big numbers. We got short there, reversed very quickly, and I had a really decent day in crude oil. I mean, crude oil seems to be everything that I trade. 70% of my entire portfolio's profit. Okay, let me show you real quick here. Ninja Trader doesn't do a fantastic job when it comes to keeping data for you and seeing how your performance is, but I like to keep a trade log myself. And if we take a look here, let's go to the year-to-date performance. And we take a look at just this pie chart right here. Okay, we can see the big slice of the pie, 70.8% comes from crude oil. Okay, so all of the trading that I've done, okay, all of the profits that I've made have come from crude oil. 70.8 freaking percent. That's huge, right? 12% comes from gold, 5.8% from the Nasdaq, 5.9% from the S&P, and so little from the Nasdaq and the S&P, which are the markets that everybody wants to trade. And it's because volatility sucks. There's no volatility, there's no fear, there's no range in the market. I mean, early this morning we had a 5-point range. Okay, that's what we traded all night long. 5 freaking point range. Ugh. Meanwhile, the volatility in crude oil, if we compare it, I did this yesterday, but if we compare the VIX to the OVX, which is the crude oil inventory, what am I looking for? Crude oil volatility index. Okay, if we compare the market volatility index versus the crude oil volatility index, the difference is huge. Crude oil volatility sits at 35. Meanwhile, U.S. market volatility sits at 9. Imagine if the S&P 500 and the volatility index was at 35. We would have ridiculous 50-point ranges in the S&P 500 almost on a daily basis. I mean, it would be ridiculous. It would be amazing for day traders like myself. But with low volatility, it's an investor's type of market. Just buy it, hold it, and you're golden. For day trading, it's not good, especially for the S&P 500 futures. So, all right, so let me put that away. Let's get back to the focus here. So, blowout winnings when it comes to the inventory number, definitely extremely bullish, and the market displayed that. I mean, we traded higher. Looking at the profile here, we can see, this level was tested. We wanted to sell this area because we had value areas over here that have not been tested. And, I mean, it was a good trade if you got short and if you were up at 6:30 in the morning ready to go and trading. So this, this level got hit really early, so we weren't trying to sell it again. But, 80 all the way down to 60 is about 20 ticks of potential profit. And then on the inventory number, we can see, we hit the nail on the head every single time we come out with these numbers. I mean, true value is what we find, and it's true levels of support and resistance, right? Your normal pivot systems like Woody's pivots or just your standard pivot indicators, they don't work as efficiently as the market profile. With the market profile, we know the exact levels we want to hit by determining the value areas of singular distributions, not multi-distributions, okay, singular distributions. This is an example of a multi-distribution profile. So I'm just going to go ahead and start merging the crude oil market today. Okay, how many distributions do we have here? Well, what I like to say is how many mountains or peaks do we have here? Well, we have 1, 2, and 3, right? Multi-distribution profiles. If I say P, B, or D, how many mountains do each one of these letters have? Well, just one on P, one on B, and one on D. So how come this profile has 3? Well, it's because it has a combination of any one of these 3 letters, right? So we got to split it to find singular distribution, okay? Now, let me show you this. TPO value area high is right here. TPO value area low is right there. Volume profile value area high is right here, and volume profile value area low is right here. Okay, big range of value area, right? It's a huge range for the value area. Okay, how am I supposed to pick levels of support and resistance inside this range? It's too big, and it's not accurate, right? That's because true value is not in the combination of singular distributions, but true value is found inside the singular distributions, which is why we have to split it. And with our software for NinjaTrader 8, all I have to do is click, and done. Okay, I've just separated each distribution into its singular form. We have a D with a P here and a P. Right, so 3 completely different distributions. And this is where true value lies. So tomorrow, I'm going to be looking for support at this area if we didn't test it overnight. So 47 to 47.10. This P right here, it's got a value area around here. So 80 to 70, I'd be looking to buy. And if it, worst comes to worst, 50 to 40, because we got value here. These are true levels of support. As for resistance, we really don't have any. Like I said, we only care about the market really only cares about its short-term memory. And when we take a look at the short-term memory, I don't have any data, right? I don't have any historical data. So there's no resistance at this point. The market can continue to go higher. And I'm not looking to short. I'm actually looking to get long if we get a pullback. Right? That's the smart way of trading. Let me ask you this. We've all heard of the term buy low, sell high, right? So why in the living heck would you ever want to buy at the highs, right? Wait for the pullback and then buy it. If you're, buy low, sell high, okay? In this instance, we're looking to be buyers, and not sellers. So if I'm going to buy first, it better be on a pullback at a low, definitely not at the highs. So trading the crude oil market worked out really well today. It's the only market I traded. Came out with $2,000 of profit for the day. Not too bad. It's not the best day I've ever had, but a profitable day nonetheless. I'll take it every single day. Taking a look at gold. Gold remained as an inside day. But they're continuing to buy gold. Okay, let me switch here to hybrid. They're continuing to buy gold. So when we split the profiles, we got a P here, we have a D, here's a P, here's a P, here's a P, and today we have a D, a pretty big one too. A lot of consolidation. But what is going on? Okay, here we had consolidation followed by a trend, and the institutions were buying. Here we had a full-on trending day. The institutions were buying. Here we have a consolidation day, and the institutions are buying. What do you think is going to happen with this market? Are we going to go higher or lower? Like I said, these institutions, they know what they're doing. They have better access to better information than any one of us. Okay, they have deep pockets, and they're usually not incorrect. Okay, they're usually not incorrect. So if these guys are buying, I definitely am looking for the long side. Okay, so taking a look at the profile, I'm taking a look for, I'm looking for longs rather than shorts. And you know, it wasn't given to us. This morning we wanted 33 half to 34 half. Market didn't sell off far enough to get there, and if that failed, we wanted to buy 30 to 31. Okay, of course, you know, the market didn't give it to us. We went nowhere near these levels, and I wasn't looking to short. I'm looking to get long, right? Why am I going to compete against people who have, you know, more resources than I have? Here, as you can see, this was the closest we ever got to getting to that area, and this was at, let's see what time this was at. This was at 3:30 in the morning. Okay, so I'm definitely not trading at that hour. But D-shaped distribution, you know, institutions keep buying. So guess what? This market is going to continue to go higher. No doubt about it. I think we're going to head to 1250 in seemingly no time. You can quote me on that. And looking at the 30-year final contract here, sort of the same thing. You know, the institutions keep buying, and they're buying low. Okay, they're buying low. Okay, and they're probably going to sell high. So, looking at a historical data for the 30-year, I mean, look, there's a lot of selling, and now we're seeing a lot of buying coming out of the institutions. Okay, a lot of buying from the institutions, and we're making higher lows. Okay, we've begun an uptrend. At some point in time, we're going to rip to the upside, and this you can quote me on again, because it's almost guaranteed that this is going to happen. In the options market, I believe the other day we saw like a big order for TLT come in. They were buying upside calls. Now, I'm not an options trader, but you know, that's another way institutions get to play into these markets. You know, I like to trade the commodity, the futures itself. But trading through the options market is using the TLT. So they're buying upside calls. This market can continue to go higher. Okay, they don't want to lose a large amount of money, so they better be right. And I think they are. Okay, the 30-year bond, we're seeing a lot of buying. Here on this day, there's a lot of buying. Today we didn't do anything, but there was more buying than selling. It's definitely something brewing here in these markets. When we take a look at the profile, we were looking to buy 12 to 16, and we were looking to buy 28 to 30, pretty much. If this level failed, we were looking to catch the second level of support, which was at 28 to 30, 28 to 53, 152.28 to 153 flat. Of course, you know, this market, much like gold, did not pull back. Much like gold and much like the S&P 500, did not pull back into these areas, so there was just no trade, right? Which is fine. You know, I'd rather not take a trade than take a, you know, that's smart to me, rather than take a trade that I'm kind of not sure about and that the profile is telling me I probably shouldn't take a trade, right? So anyways, guys, that's all the time I have for today. Thanks for your attendance. Thanks for watching. You know, definitely check out the Tech Meets Trader Facebook page around 8:30 a.m. every single morning. I do another live video mornings and then in the afternoon. And you know, early this morning, if you listened and you know, took a look and took my word for some of these areas, you would have seen, you know, the reaction we had when we hit this level in the crude oil market. And we do this every single day. I do this every single day, where I tell you, you know, these are the levels to buy, these are the levels I'm buying, okay, and these are the levels I'm selling. and I review them afterwards and later in the afternoon, like I am doing right now, and we talk about the market as well as a whole, and go over what the catalysts were, and all that good stuff. But early in the morning is probably the more important one because the levels are there. It's all about taking trades at those areas. We did that today, and I mean we did pretty well. I mean the market profile keeps me on the right side of the market every single day. Um, this month alone, I've only had one losing day. Where is my spreadsheet? Where did I put that? So let me pull that up really quickly here. There we go. Taking a look at, let's see, the month of July, and first week of July, first day profit, second trading day profit, third trading day profit. I took a day off on that day. I didn't take any trades on the 10th. On the 11th, profit. On the 12th, my one and only losing day for the month. Okay, here, another profitable day, nothing but green. So the market profile really keeps me on the right side of the market. I know what trades to take, what prices I want to take. I mean, I can't say enough about it, really. It's just a fantastic tool, and I think every futures trader needs to be using this. Okay, if you struggled in the past, this is probably the answer because it's just that good, right? It's just that good, and the fact that I can merge and split these distributions, it just gives the trader an edge over everybody else because not everybody has this type of technology. So being able to buy and sell, true levels of support and resistance, it keeps me on the right side, and I'm able to continue making a living out of this trade, right? But anyways, guys, just make sure you swing by in the mornings if you can. If you can't, just watch the video afterwards, and definitely come to the PM video to see how we did. Alrighty, guys, I want to wish everybody a great evening, and we'll see you back tomorrow bright and early in the morning.